Let's talk about the candle range theory. This will be used for scalping most of the time in this video. So we are going to focus mainly on how to trade it a lot. So let's begin with the video so that we can cover a lot of things to be able to trade this model effectively. So the topics that we are going to cover in this video, we are going to cover what is a candle range theory, how to spot the CRT model the easy way, and then we're going to cover some tips and tricks to trade this CRT model the right way. And we're going to cover a lot of examples so that at least you can try to understand this model effectively. So the first thing that you need to understand is, what is a CRT? CRT means every candlestick in a chart is in a range. Like if we look at this one here, we have this candlestick, we have the high, and then we have the low. This candlestick here, this is what we call a range. That is why we have what we call the CRT model in trading. So, but basically, how should we trade this? Because some of you, I believe, this is very confusing because obviously every candlestick will be broken either on the upside or on the lower side of the price action. Like for example, we have this candlestick here. The next candlestick can still spike above or spike below. This is what we are going to focus mainly on this video because I want to show you how price behave in some certain situations. Like this is the perfect example on how the market behaves because price can still break above and still break below. But we will never know where price will go next. Based on this candlestick alone, price can still move to the upside or move to the downside. That's how the market behaves most of the time. And also, price on the CRT must take the liquidity on either side, maybe the CRT high or the CRT low. When price, because this candlestick closes here, this is a bullish candlestick, price can open, trade to the upside, and then come to this range and then close. This will be our area where we'll be looking to either take a short or a long position. And also another thing, if price open here, let's say we open around this area, this will be our low. And then if price do something like this will be our bullish candlestick, by the way. Because price closed outside this range here, this will be invalid CRT. So we have to consider that when you trade the CRT model. This will be a valid CRT model because price closed inside this range here. That's how at least you can try to understand how the CRT model works. This is just the basics here, but we are going to cover a lot of things so that at least you can try to understand it perfectly. I'll try to be slow as possible so that this video can be very, very helpful to you guys. So right now, let's look at this example here. We will focus on this one first. This is the CRT high, and then we have the CRT low. But if we look closely, we have the opening price. This is the opening of this bearish candlestick, and then we close here. Because price closed inside this range here of this candlestick, we still consider this as a CRT model. Other than that, that means the model has been invalidated. Okay, I hope you understand, but you will understand it when we move on perfectly with some examples. This is the USD 30 on the daily time frame. I believe this was taken from this weekly chart. I believe you can see that we have this range here. We have the low of the CRT, and then we have the high of the CRT. But if you look closely here, we spiked above but still closed inside this range. So that means we can expect the market to push a little bit lower based on some few backtesting that I have done before. This will be a perfect example on how at least you can try to understand it. If this candlestick was a little bit bullish, like this way, let's say it was like this, okay? If this candlestick was like this, because price closed outside this range here, this will be invalidated. You have to see that price must close inside this candlestick here so that we can at least try to trade to the opposite direction of the market. Most of the time, the CRT model will be traded mostly for reversals or to catch like maybe small moves, but I like to take trades for a long period of time. Other than that, I won't take those such trades. Even for scalping, I like to see at least like if I entered maybe on the 1 minute time frame, I have to at least wait at least 4 hours to get out of the trade. But, and another thing, the next candlestick on the CRT model, it doesn't have to be, as you can see, the first candle here, this is bullish, meaning it's moving to the upside. The second candlestick is bearish, meaning price is moving to the downside. But then, it is not always the case that price has to close here with a bearish candlestick. It doesn't work like that. If we look at this range here, we have the CRT high and then we have the CRT low here. If we look closely, price closed with a bearish candlestick, but price moved to the upside. Here on the second candlestick, like on this one, we closed with a bearish candlestick, but price moved to the downside. That's when you should at least try to understand what you call a price action, because this is going to be very important when we move forward with this video. Let's look at some few examples. So right now here, we have a candle range theory here, because sometimes it doesn't happen on the first candlestick, sometimes it can happen late. There's a lot of factors that could happen in the market, because if you have noticed, you can watch a couple of CRT videos, but when you enter a trade the same way that you have watched those videos, you'll always get stopped out because you didn't understand what you call a price action. So based on this theory here, we can clearly see that price made this range and then we sparked above and closed bearish. This is the candlestick that you should trade, especially there's a little retracement here. You have to catch this trade around here. If let's say you are on the 4 hours time frame, at least try to get into this trade maybe in the 3 minutes time frame, or maybe the 5 minutes, or even the 1 minute time frame. It depends on which time frame feels good for you. And then another one here, you can have a range, but then price can spike on the upper side and on the lower side, and then price can move to a different direction of the market. Another way where we can spot a CRT model is when we have a retracement like this, and then suddenly price makes a huge move to the upside, and then we create a CRT high and low, and then we spike above, and then we move opposite direction of the market. There will always be some silly moves in the market when price is trying to reverse aggressively. And most of the time, you are going to spot the CRT models after a sharp move to the upside like this. Most of the time, if let's say price is moving to the downside, we have this consolidation. Before price can continue to the downside, you will see a strong move to the upside, and then CRT here, and then continuation, so that the market can take out the liquidity from this side before it can drop lower. So let's look at how you can use CRT with combined with the market structure here. And this one is very, very effective. If you understand market structure, this will benefit you a lot. But because of this, we have to at least try to read the structure first. We can clearly see that we have a move to the downside, a move to the downside. But before we break this previous high here, we make a low. This low here is very important because this is the internal low that will be used in the future most of the time. And then we have this high here. When the market drops lower, we have to find this low. And then the low must also be taken out. That is when we get this area here. This area here is where you should at least try to look for the CRT model here, or maybe your other blocks here. But the CRT model must come around this area, and you will see a sharp move to the downside, and then a CRT model around this area. This is where at least you can try to spot that model around that area. Other than that, I believe it's not important to trade something that is not visible enough. So based on the structure, you can see that we have this high, we have this low, and then price move to the upside, drops lower to create this internal low, and then we move again to the upside to create a new high. But when price start to move to the downside, it will do something like this to break this low here, and then we move to the upside. This is the low that I was talking about, this one here, and then we break it, and then we have the range here. This is the range. Then you must try to find your confirmations throughout based on maybe your trading strategy or something like that. But I'll show you my few strategies that I use to make some confirmations in the market. So then you'll enter the trade around this area with a stop loss not below here, not here, at least around this area, because sometimes price can still spike and then move to the upside. That's the reality of the market most of the time. And then take profit, you can target maybe the swings, There's a lot of swings in the market. That will be mostly your take profit levels in the market. Other than that, I don't believe you will have proper take profits. Let's look at the inside bar CRT model. This one is very rare, it's a rare pattern, but I just realized that I have to just edit here so that at least you can try to understand it. But it's a very, very rare pattern. You won't find it very easily in the market because it's very rare. You will have the CRT high, the CRT low. The next candle doesn't break either the upper side or the lower side here. This will be your inside bar. And sometimes it can be, let's say you have this CRT low and high, we can have the first candle, the second candle, without even breaking the CRT high and low. You will find most of those candlesticks in the market, either you like it or not. So to understand, this one is just an inside bar. It's not very difficult to understand. This is the example. You can clearly see that we moved to the upside, we made a low here, and then we have this high here. Price moved to the upside, and then, as I said before, price, before it can make the candle range theory, price will be very, very aggressive. You can see that this candlestick here is very big to the upside. And then we have the CRT high and low, and then we have the inside bar, and then we have this candlestick that spikes on the low of the CRT and even on the high. That is when you can know that, okay, price even closed inside this range. That means price is likely to drop to the downside like this. And this pattern here is very powerful, but is very rare. During my backtesting of over 20,000 price action chart, I've seen it maybe a few times, and I was very deep into backtesting. So let's look at another example, but most of the time on this video, we're not going to focus on this inside bar because it's very rare. It takes time to find it on the market. But if you understand how to use it, you'll find it most of the time. So this is the possibilities or some ways to at least try to find the CRT models in the market. You can find them during the end of a trend below the previous low here, or during a continuation of the market. And during the continuation, obviously, you will start to see price action trading above this previous high here. This is where most of the time you will see the CRT model above this previous high here. Even for a continuation on a breakout, because sometimes price can break, give you a CRT model here, and then price move to the upside. This is where, but you have to use proper risk management here. Because if you don't use proper risk management, that means you're not even trading, you're just gambling. And also for the continuation, we break the previous high, we break the internal swing high, and then we find the CRT model here, and then we find also the confirmation. Confirmation comes in different ways because, as I said before, price can close with a bearish candlestick, but price can continue. We can see that we have a confirmation of a bullish candlestick, price move to the upside. Even here, we have confirmation of a bullish candlestick, but price move to the downside. I think I have covered this before, I'll put the link in the description below so that at least you can try to understand what I mean by price action. And also, most of the time during the price action, you'll see a lot of rejection in the market. If we look closely, let me give you a proper example. We can see that price is rejecting to be bearish. You can see that's why we have a huge move to the upside. Even here, we have a huge move to the downside. After we have this range here, then price move to the downside. That's the reality of it, so that you can at least try to understand the CRT model. But before we continue with the video, I have a discount offer for traders. They offer challenges from Forex, the crypto market, and even the futures market. And if you use the link in the description below, you'll get a 15% off. They are very transparent so that you can trade without being stressed. They offer challenges from the fast using step 1, instant using all the major trading platforms, including the MetaTrader 5, the C-Trader, and even the Trade Locker. They are also trusted, as you can see here, with over 240 reviews with 4.5 review. You can also check on the profile match. Their platform is very easy to understand. If you want to buy a challenge, it's very easy. You can buy it using the one that you like. If you like to trade the crypto market, you can click on the crypto, choose your challenge, choose the trading capital, and then use the link in the description to get a 15% off. All the information will be on their website. I'll put the link in the description below. They are also very transparent without no hidden rules like the other one that we have heard of before. Everything is just transparent on their website. No IP rules, no hidden rules. There are also some tournaments that you can join when you are a trader with ForTraders. You also have tutorials to understand your trading interfaces, have the economic calendars, and then your challenges will be around this area. And also the withdrawal is using Rise or cryptocurrency so that every withdrawal can be at least faster. So if you want to check them out, the link will be in the description below. Also, don't forget to use the link to get the discounts. So let's continue with the video. So let's look at more examples using the CRT model. This is gold on the 5 minutes time frame. And as I said before, the CRT model will come mostly after an aggressive move in the market. So if you focus mainly, or if you want to build a trading strategy to make some scalping, you can mainly focus on that because that is the most powerful one. And you will catch some insane trades. If we look closely on this area, we can see that we have a consolidation phase. This is where the market is very slow, but then we have this rally. The market, you can see that we have a lot of huge candlesticks, and then we have some small adjustment here. And we can see that this is the range here. The range basically is just a high and a low of a candlestick. That's how at least you can try to understand it, so that you don't just confuse yourself with these new names in the market. Just say the high and low of the previous candlestick. It doesn't even matter at the end of the day. What we do in the market is just to make some profits. That's all we have to do. So we have this CRT low, CRT high. And then we can clearly see that this candlestick, it made a push to the upside and then came and closed inside the range and closed around this area. This is the perfect example of a CRT model. So basically, if you want to trade this, you can just put a stop here and then maybe target this low here because you don't have a proper low beside this low here. And then you can trade to the downside. Let's look how the market behaved. And we can clearly see that the market, it just dropped after this candlestick. And if we look closely, we have a perfect example of a rejection candlestick. We can clearly see that the wick, this wick from the upper side, and this wick, this one is very small. This one is very big. So basically, in theory, when we talk about price action, this goes to show that the sellers are coming into the market very, very strongly. That is why we see this next candlestick being so huge. That's how at least you can try to separate price action and other theories in the market. If you start to look at price action this way, every candlestick will tell you a perfect indication on where the market is likely to go. You will find these rejection candlesticks in the market. They will basically tell you the same story or different story. Another tip that I want to talk about is the CRT model and how to manage a few risks. You can clearly see that we have an inside bar here, but this next candlestick is the one that broke and then closed inside. And we can also say that, okay, we can see price broke this low here, and this low and this other lows inside this area here. But that's not the main problem that we have to focus on here. Because as we can clearly see, if right now we enter the market like this, let me clear this out. If we enter the market around this area, we make an entry and then we put a stop loss here, expecting the market to push to the upside. Okay, let's look at how at least we can try to avoid this kind of behavior in the market. Because as we can clearly see, we have this low, have this low, have this low. Let's look. Okay, the next candlestick will stop you out. So basically, this inside bar didn't work at all, but you got stopped out very easily. If your stop was here, you'll be in the trade, but you will be on a drawdown. Your money will still be in the red side. Let's say maybe minus $490, let's say, for example. And we know we don't like to risk too much in the market. Nobody likes to risk too much in the market. But then, look closely. The market pushed to the upside once more. Even if your stop loss was around this area, you will be stopped out by this move here. So basically what I'm trying to say is that no setup is perfect in the market until you make profit. There's no such thing as perfect setup because the market will print out any candlestick based on the people who place their trades at those certain times. So there's no such thing as it. I'm just being real, guys. So we can move here and say this is the CRT high. This is the CRT low. And then we have this move here. It got rejected and then closed inside. And also it manipulated this low here. That means this is a nice setup, not a perfect setup. So we can still enter the market. If let's say we lost this trade here, we can still enter the market and return the loss that we have from that 490, and then we can profit more from this trade. So proper risk management is very important because if you lose one trade and then you are not able to enter another one, so what are you doing? Don't try to gamble in the market. But I'm not here to give you any financial advice. I'm just being honest. So let's look at this one. This is the GBPJPY. This is the example one on this video because I want to touch on a couple of things based on the CRT theory. So this video basically is just something that I wanted to talk about on the CRT because it's very simple to understand CRT and it can be used for scalping for long period of, it can hold trades for like weeks or so. So we have this low, we have this internal low, we have this low, price move to the upside, and then we have this high. But price never broke this high again. So that means this one is the main structure. And then we have this low. This will be our main low. But if you look at price action at the current price here, we can clearly see that we have a break of market structure like this. And then we have the CRT high and then we have the CRT low. So basically we can enter the market here, entry, stop loss around here or here. It depends on your trading behavior because some of you will place a stop loss just below the entry. And then can clearly see that price moved after making this a rejection candlestick. This is a rejection candlestick. And then price moved to the upside. If you go and backtest this kind of patterns in the market, you will find them everywhere, everywhere. Using even support and resistance level here, you can clearly see that we have this range. Price spiked above, closed bearish, price moved to the downside. This is pips here. These few pips can change someone's life. Full margin, by the way. So, what I'm trying to say, when you look for a CRT pattern, look for moves that are very, very aggressive before you can put the ranges in your chart. Like, look at this one. So, let me try to highlight one thing here. So, basically, let's say we have a move, we consolidate, we'll strongly break this, and then we have the CRT here. That means the market is likely to push to the downside. If you look closely here, we broke this high, we tapped above this high, and then we have this candlestick confirming the CRT. Even on this area, look at this candlestick, was very, very strong to the downside. Most of the people will just run from this kind of candlestick. You should start to love them. That you are babies. You must treat them like glass. I'm not sure if I'm talking the same thing or not. But those big candlesticks in the market must never scare you. Look at this. Most of the people will look at this candlestick and then say, wow. But you have to wait for confirmation. This whole area here is just a range. Price sparked below the low of the range and then reversed. Some of the people will just look at this move like this as a breakout. And then they will start to sell maybe around after this candlestick. And then they will be surprised when this move is happening. And they will be inside this trade for this period of time. And then the market will chow them. I know most of the people who like to hold their losing trades more than their winning trades. If you are still that person, I think you just need to stop. But I'm not your financial advisor. I have to just see someone to talk with you. But I'm just being real here. If you are able to hold a losing trade from here, from this area here, until this area, but you can't hold a winning position for at least, because you're under 5 minutes, for at least 1 hour, that means you must do something about it. But I'm just not here to tell you what to do with your trades. I'm just being real, guys, because most of the people don't like to be told the truth. Let's move on with another example. We have the German 30 minutes time frame. Firstly, we need to analyze. Let's analyze a chart like this. This area looks like price is very slow. That means we might be in a correction. But if we look closely, the moves to the downside are very, very strong. It's convincing. But here, this is where things change. We have an impulse. This is an impulse. And then we have the correction here. And then price broke this low. And then we have the CRT high. And then we have the CRT low. So that means basically we can trade this and then put our stop loss around this area over here. And then wait for the move to the upside. But I guess we'll never know how the market behaves because we don't have any solid analysis. Like any higher time frame analysis, we're just looking for something just to scalp. Because sometimes higher time frames can be confusing. If you don't know how to trade the higher time frames, what are you doing in the lower time frame? And then we can clearly see that after this range here, price moved to the upside and very strongly. So the thing that I was talking about is that someone will enter here and then miss the whole move. They will get out around this area. But when they are in a losing trade, like for instance here, they enter a buy here, price will move like this. They will hold this one longer. But the winning trades, they just get out very quickly. But you know yourself, I'm talking to you. I have to stop. So let's continue with the video. Let's look at example number 3. This is the US 100 on the 1 hour time frame. We have the market like this. This one looks like it's consolidating again. But if we look closely, as I said before, CRT, if you want to look for CRT, look for a strong candlesticks. You can see the strong candlestick and then it broke this low. So this will be your manipulation. And then you have the CRT high and then you have the CRT low. That means I can enter the trade here and then put my stop loss maybe here or here and then wait for the market to move to the upside. Even if I get stopped out, I'll use a proper risk management. If your strategy is more powerful, that is when you can start to increase your risk. But we all know we don't trade the same and we'll never trade the same in the world. Same goes as driving. We don't drive the same. Some people drive an automatic with 2 feet and then price move to the upside. Stop loss is safe here. So SL, and then you wait for the market to move to the upside. Same goes for this area here. If we look closely, we have this aggressive move to the downside, and then we have this rejection closing inside the range. We have this high, we have this low, price close inside the range here. So you can still enter the market and catch another move. If you like adding some positions, if you're still on this one, you can still enter again around this area. Okay, I hope you understand what I mean by that. And also, you will have some losing trades. Let me show you an example. I believe I see a losing trade around this area. I believe so. We have this strong candlestick here. Let's say this is our range. We have the high, we have the low. And then this move here spiked below, but price action after, it just moved to the upside and then stop you out. Even if your stop loss was right here, you'll be stopped out. But if your stop loss is right here, you'll be safe. But what if the market moved to the downside again? Huge loss. But that's a story for another day. Let's look at example 4 here. This is the EurUSD on the 15 minutes time frame. We have a downtrend. Obviously, most of the people will be looking to sell. And then we have this correction. They have this impulse. And then we have another impulse. But if we look closely, price tried to move to the upside twice, 2 times. But then it got rejected here. And we can also call this our range high, our range low. And then we can wait for the move to the upside. Let's look how the market played out in this situation. Played out perfectly nice, but most of the people will be scared to enter the market here. If you feel like you are risking in the market, try to reduce the risk. If you are looking to enter the market maybe with 0.10, but you feel like you're going to lose the trade, nobody's going to tell you what to do. That is your own account. You can just use 0.01. It can still make a lot of money. Like 0.01 with 100 pips, that's $10. One bag of McDonald's and chips, fries. Let's look at another example here. And also, before I end the video, please consider subscribing to the channel. I'll try to be consistent. As you already know, I'm not consistent. It's because I have a lot of things that I'm doing on the other side. This is the Bitcoin on the 5 minutes time frame. And also, you will get this PDF on the Telegram or even on the Discord. All the links will be in the description below. If you have any questions, just consider texting me or an email will do. But on Telegram, that is where I'll respond faster. Another thing that you need to understand is that using the candle range theory, you can use it with other trading strategies like the order blocks and so forth. Like for example here, we have this bearish, you can say bearish order block or something, or maybe a supply zone. We have, let's say, I'll say this is the range, and then we have a rejection here, and also a price spiked above this area. Would you enter this trade? Yes, I will. Let's look how the market behaved. Enter the market here, stop loss above, let's say around this area. Let's see how the market behaved. We got stopped out immediately. That's what I'm telling you. You will never have a perfect setup. Even if you look closely, this broke even this low here. But then we have another range here. But price took longer until we break to the downside. So you will never be in a good trade because the market will print out any candlestick it likes to print. All we are using strategies and so forth, those are just probabilities to make our trading a little bit easier. And then we have another one around here, and then we have rejection. We can clearly see that we have a trending market. Would you enter here after losing this one? We'll never know. Let's see how the market played out. Okay, if you entered and then entered here and then stop loss here, you'll be stopped out by this move. That is why there is no perfect setup in the market. Everything can happen. So if you want to understand this kind of price actions, how to avoid them and so forth, consider subscribing to the channel or look for more videos that are on the channel. Let's look at the last example here before we end this video. you can clearly see that right now we have, I know some of you don't even use trend lines anymore. This is a perfect setup or perfect example of a breakout, because you can clearly see that we broke this high, and then we have a correction A, B, C here, and then we have the CRT here. CRT high, CRT low, and then we have a rejection here. Yes, I will enter the straight because we have an ABC pattern here, also breaking above this high and above this low. So obviously I'll enter the market here if I find a CRT pattern. And also the CRT pattern, I have to look for a strong move to the downside. And we have the strong move to the downside and also a rejection. Other than that, I'll just avoid this kind of silly candlesticks in the market. I'll just enter the market right there. Maybe put a stop loss just below this candlestick here. And also there's an fair value gap around this area, but price doesn't always come to those fair value gaps, just so you know. It's very rare for most of the candlesticks to come to those fair value gaps. Maybe this one, yes, but fair value gaps, price doesn't always come to those fair value gaps. Just look, go and check SD, I think chart.I or something, or even BTC USD. Go and look for those kind of price action. You'll see that on BTC, there's a lot of fair value gaps that was left years ago. Price never came to that, and it will never come to that unless Bitcoin just disappear overnight. So if you have enjoyed this video, please consider subscribing to the channel, like the video, and also don't forget to check the link in the description below to get a discount from ForTraders.